Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Thursday, January 16th, 2020, and this is the daily report for gold and silver. Although gold closed down marginally today, considering the current events that have been affecting pricing, I think it has held up rather well. And on today's show, I want to look at two things. First of all, a fundamental rationale why we see support coming into the market, given that we have events that should have taken gold much lower. And secondly, I want to continue on the topic of types of corrections, and we'll actually take a look at a couple of reprints from R.N. Elliott himself, and then try to look at those as we look at the markets. But first, let's take a look at current pricing. As you can see, gold closed down marginally, about 0.1%, down $1.50 at $1552.50. That, of course, is basis the February contract. In terms of drawdowns today, the big drawdown was platinum, hovering just above 1,000, but down $16.60 at $1,009. Silver lost about 0.3% or 5 cents. 17.94, and lastly, palladium continues its historic rise, 22.08 after factoring in today's gain of about 2% or $43. Let's take a look at our technical studies. First, I do want to take a look at palladium. Palladium has been so strong and so vibrant. I have very rarely seen a marketplace in which we have this consistent consecutive days of higher highs, higher lows, as well as higher closes. Except for this one candle here, the remaining candles in this sequence are all green. That's very solid. And then just prior to that, we had this sequence. So this market has been on a historical rampage to new record highs, basically on a daily basis. Traders, throughout the week, I have been talking about different models that a correction can unfold as. And typically, the first type that you look at is simply called a simple ABC, but that can be broken up into a multitude of variations. I have just put up a reprint from Elliott Wave's Masterworks, and what you can see is the variations of a ABC correction. On the first line, or figure 13, a zigzag, a flat, and an irregular. A zigzag is simply where the C wave is the lowest of any of the waves, and you get a typical ABC correction. The flat is basically a scenario where the low at A and the low at C are equal, and an irregular is a ABC correction where the B moves above the start of A, and then the C does move below it. These are two variations. Then we get more complicated counts in figures 14 and 15. So as you can see, when I draw a basic ABC correction, it is simply referring to the most simple of the models that we have. So for example, when we are looking at the correction that occurred following wave 1 to wave 2, we can see that it had a small ABC and that we had our larger A, B, and C come on top of that, and we had that subcount that came into it. And that gives you an idea of the real complexity of even the simplest form of an ABC correction. The next plate that we are going to look at looks at two different distinctions of a corrective type, the horizontal triangle as well as a diagonal triangle, and the horizontal triangle breakout. Because we have seen that before. In fact, we have seen that quite recently. So for example, when we're looking at this most recent breakout that occurred right in here, what we can do is we can look at this as a basic symmetrical, top descending, bottom rising type of correction. Because what we had, if we look at the details of this particular chart, is that we could make a case for a 5 count, 1, 2, 3, 4, and then 5. and then this would be our thrust. We can also make a case for the fact that this was a bull flag that converted into a bull pennant. But as you can see from this illustration, there are many variations. Now, we cannot make a determination of how this is unfolding until certain things happen. The first thing is that as the market sells off and hits a low, it's going to be how this next rise comes into play. We would expect a lower low than the low of 1613, but what we could see is another compression triangle form or a flag formation. A flag would be something like this. We could see a pennant if we begin to draw it from another area and we pick the lows that came in here and then kind of extend that here, and then the highs, we almost want to take that out, but even if we don't, we get something like this or something exaggerated like this. So as more information becomes available to us, it will allow us to determine what is the most likely outcome in terms of the corrective type. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.